Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Sales International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead. However, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of these patterns, levels, analysis or any related items on these my charts. This was all authentic intelligence, all my own original work, as I think you deserve to have that. So with that,
LME 3-month copper. In January, I compiled and published my annual video commentary on LME 3-month copper. Please look at the YouTube index to find it. In this, I looked back and found a very relevant technical pattern for the action seen since mid-December last year. That key piece of evidence, recreated here on this daily chart, is the bright red 2009 to 2016 bullish shift pitchfork. And the specific key piece is the bright red upper tine, currently at 13,371, that sits just above the top of the market and has capped, despite being significantly pierced on one occasion, that has capped a number of significant thrusts higher seen in January and February. Indeed, this is the key piece of overhead resistance and only piece of overhead resistance seen here since the break up and out of the recent showrunner for this market in mid-December last year, the July 22 to January 23 shallowly bullish shift pitchfork. So this leaves us with the question, what now? Well, there are at this time two possibilities. I initially thought we might see the results by mid-February, as well as the likelihood of some false breaks as well. But I think this is now looking delayed. The first possibility was to look at the whole 2026 action so far as a possible complex top. The base of this pattern is the dark blue early this year pierced but so far not broken breached uptrend, currently at 12,831. This was pierced on 3 occasions during the last 2 weeks. And then also today. But there were no closes below it, not yet at least, though today's action is looking like it might just do that. I cannot give targets yet as the chances of a false break lower are very high, but I can lay out some potentials. Thus, a primary potential low will be down in the 12,588 zone, with a secondary harder to reach potential down in the 11,977 zone. As I say, these are not targets, not yet, but just in case the move happens before next time, then you would have the numbers at hand. The second possibility involves the previously mentioned bright red upper tine above plus the dark blue breached uptrend. It is look at it as a possible hesitation of some form prior to a further attempt higher. I grant you this right now seems less likely. Indeed, neither pattern is perfect, far from it. But even now, the opportunity exists and it deserves close attention. In all this, please be aware, as we have already seen, high chances of false breaks in either direction. LME 3-month aluminium. The markets break higher in early January, up and out of the late September to mid-November 2025 bullish shift pitchfork, was coincidental, and by the way, I do not think it's an accidental coincidence, was coincidental at the same time as a move up and out of the more longer-term bright red December 23 to July 24 bullish shift pitchfork. My reasoning for this is that if you were going to break higher, then it was best to smash two patterns close together, despite the additional resistance they may have, to better ensure a move higher rather than later when you have to deal with each one individually. They crossed over on Christmas Eve and the market punched higher soon thereafter on the 5th of January. Now, as I said 4 weeks ago, and I quote, there is the possibility the market may now move along the top of one or other of these upper tines, and it seems to wish to do that with the now broken upper tine, and that is something to watch out for. End of quote. This leads to the possibility of another larger pattern that may be in the offing. This is not a very well-defined pattern, and I don't think it has the required number of touches per side as yet, but we may have an April 25 to date very large rising expanding wedge pattern, outlined in bright green on my daily chart. That's currently 29.12 to 33.52, so quite large. We're still within this pattern, despite a spike higher 3 weeks ago that breached the upper trend line. But this has since been repaired, hence I suggest this is also one to watch. Another feature to watch for, and one that became evident to me on my longer term chart when compiling the annual video commentary, you can find this on the ADM ISI YouTube channel, is a very large November 2015 to April 2020 bullish Andrews pitchfork, which I have transposed onto this daily chart and highlighted in purple. Nearest par is the purple middle tine above, which is currently at 34.06, just under the top of my daily chart. This is not a target level, but a likely resistance should we see prices again, as it sits close to the July 2008 high at 33.80, so in case we see it again up there. One final thought I gave last week, and it was an immediate one, it was to look at the action and that is to look at the action 2 weeks ago as a possible horn bottom. Now this looked very good, but it failed to break the top side of this pattern at 31.34, though we came awfully close to closing over it on Monday last week. I even suggested potentials in case we broke higher midweek, but these were to no avail, as we have since then turned lower. However, I am considering running an optimized uptrend, possibly from late January, even as far back as November last year, just below the green short medium moving average, currently at 30.42. However, on reflection, why bother, as the green short medium moving average, currently 30.42, is doing a good job as a proxy for such an uptrend. LME 3-month lead. The recent key pattern here had been the original rectangle pattern that developed into the quite shallow early August to mid-October 2025 bull channel, which was breached on both sides in October and late November last year, and as I said 10 weeks ago, and I quote, enough that I no longer think this pattern is viable as a rectangle, end of quote. The recent break lower from this pattern halted in mid-December last year at the 38.2% Fibonacci line for the whole of the 2025 move at 1939, forming a 3-day bullish morning star pattern and moving higher up to test the high of 2025 late 6 weeks ago at 21.05, and failed. I suspect this failure was mainly due to the nearby 50% Fibonacci line of the May 24 to April 25 move at 2098. Indeed, I think this caused this high, the high back in November last year, as well as the earlier in January high this year. Since then, we have pulled back lower, down towards the moving averages, and late 2 weeks ago, pushed down through it. In the process, the market created a small January-based head and shoulders top, breaking below the dark blue neckline, currently at 20.03, late 3 weeks ago. The primary target at 1964 was reached 2 weeks ago, but we still have the secondary hard to reach target X1 down below at 1921 still open. However, as I said 3 weeks ago, and I quote, there is no real trend here, just look at the major moving averages, they're all still closely packed together, end of quote, and this is still the case now. This brings me to my final point, and is a point I've been making here since the start of 2025, and will continue to do so going forward. It has been and still is to me the most important point of all. So at the end of December 2024, we saw that 2024 itself had created a very large and rare annual key reversal down in LME 3-month lead. We haven't done that much since, and indeed prices are lower today than they were at the end of 2024. This is not an endorsement of the annual key reversal down, but neither is it a strong countermeasure or repudiation of it. Hence I still say, even now, with prices just slightly lower today than at the end of 2024, that one should still look at all things going forward in this coming year and beyond, in this metal, in the shadow of this longer term bearish pattern.
Thank you for watching and listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.